What's going on? James here. In this video, I'm going to talk about investing in multi-family properties and why I believe that should be the first investment you ever make, even prior to retirement funds, 401ks, Roth IRAs, any IRA, unless you have an employer that matches a 401k. Then I would definitely say always put money in a 401k if they're matching it, because essentially it's kind of like free money. But if you don't, it is very important to understand which investments out there are the best. And that's why I want to go through multi-family investing and why I've done it for the last 15 years and more now than I ever have, because I'm making more money than I've ever had. And so, and that touches on a point also. In order to get into this type of investment, you need to not only make money, but you also need to save your money. But let's dive into it right now. So there's 6 major pros to investing in multifamily that outweigh investing in stocks and Bitcoin and all that other stuff. Okay. One of the things is supply and demand. And a lot of people, let me shut that off. A lot of people never really think about this. So let's take a look at supply and demand. Simply, to keep it very simple, the fact that there's always going to be a demand for your product, right? Rental units. For business, that's like the first thing you look at. So when you look at, retail and you look at all these other businesses out there, if you have more supply than demand, right, your price drops, you have to put it on sale, you need to get rid of it, it sits on shelves. When it comes to multifamily marketing, everybody always needs a place to live. And unless you're not smart enough to invest in a decent area of where your rental property is, like maybe a class C plus B, A properties, then you're always going to have somebody who's willing to rent it from you. Okay. And so you never have to worry about the balance between supply and demand. There's a fixed amount of supply in the marketplace. Yes, there could be new properties, but in most areas that I know people live in, there's not open area. There's not trees everywhere, right? We live in, unfortunately, in a world where, building on mass production has taken place over the last 20 to 30 years. But the cool thing is if you live in a area that is building more, then what's happening is that there's an influx of people coming in. They need to build more housing. They need to build more retail, and that just is going to increase the value of that property. And we'll get to that in just a second. Rental income and cash flow is number 2. Pros for owning multifamily properties, and essentially, you have the ability to put money down, purchase a property. After all expenses are made, you have cash flow coming in. All right. Number 1, if you don't, then you made a poor choice of investment properties. And number 2, a bank's probably not going to even give you a loan on a bad investment anyway. They're going to decline you. So you kind of have the best of both worlds, where maybe you're not the most savvy investor, but a bank will stop you in your tracks and say, we're not going to approve you for this loan because this is not cash flowing enough money to withstand it over the long term. So you're almost working as a partnership with the bank. And that brings me to leverage. That's number 3, leverage. The fact that you can only put down 25% or 30%. So let's look at $1 million property, a $250,000 down payment, but you're purchasing $1 million asset that has the opportunity to appreciate in the future, as well as taking the rental income and paying down that mortgage and increasing your equity. And that brings me to number 4, equity growth. You essentially you're leveraging a bank. Okay, you're using the property as collateral. Essentially, the bank says, you don't pay us, we're just going to take the property back. You're going to lose your down payment, but there really isn't a huge risk on your end, except for your down payment, right? And of course, the down payment is a huge thing. Just pay your bill. Your rental income should exceed the mortgage cost by a good amount if you made the right choice, and the bank basically is going to be on your side saying you're making the right choice. and we'll give you this loan because of it. Because most multifamily residential and commercial loans, they will take a hard look at making sure that the cash flow will support the property, not your income. Matter of fact, they kind of don't really care what your income is. Now, this is going to bring me into commercial investing and residential investing. Your residential is 4 units and under. You're going to get a better rate. Maybe only have to put down 20% instead of 30%, or 25% instead of 30%, and you're going to get a better rate in a longer term. Commercial, depending on what bank, it's 5 units and above. You're going to pay a little bit higher rate, a little higher closing costs. You may only get 25 years amortized instead of 30 years, but there's a lot of commercial lenders out there that are basically giving you 30-year amortization. They may give you a balloon payment of 10 years, which is essentially you're going to owe the whole mortgage in 10 years, but you're just going to refinance, or it's going to default into a current market rates. But for every 10 years, I like to refinance, and I'll get to that in just a second of why I like to do that. The fact that interest rates have historically over the last 20 years have been really, really low. So that's why that plays a factor. So that's 1, 2, 3, supplementary income. When you own multi units, you may get extra income from laundry machines and dryer machines. You may be getting supplementary income to renting out parking spots. Just like the 77 unit apartment complex I bought in Cincinnati, Ohio, we're doing about $3,000 of extra income a month just from the laundromat that we have in there, and then a couple $100 a month in rental parking spots. And so that's just like free money, right? Free money, help pay for, maybe somebody moves out, you use that money to pay to fix that. Okay. You have the partnership potential, meaning, 3 or 4 or 5 of your buddies could put your money together and purchase a multifamily property. The only recommendation I have with that is to make sure that you each buy under your own LLC. Make sure that there's an odd number of partners there. So then if you ever have a disagreement, at least there's 2 parties to 3 that could come to an agreement. And it just eliminates court and all that other stuff. Partnerships is hard, but if you have an odd number, you could always bring it to a vote, and the majority wins on that. Tax incentives is the most important to me. The fact that I can take huge losses on rental properties using depreciation and or cost segregation if you choose to do that, where you could essentially take all your depreciation and write it off within the first 7 years. It's come in handy for me because I've earned a lot of money over the last 4 or 5 years since starting my online business. And instead of paying massive amounts of money in taxes, I've been able to take huge losses on my rental properties through depreciation in order to write that off. It's been a blessing, and I've learned a great deal about cost segregation. I might do it in another video, but it's a little more advanced, and so it probably won't market well to the masses. But just understand that you have the opportunity to take huge losses on depreciation. Now, a lot of people will say probably in the comments down below, yeah, but at some point you're going to have to pay that. It's true. If you sell that property, you will have to pay the recapture of the depreciation losses. However, if you 1031 that money into another property and upgrade into another property, you can move that money tax-free. They're just going to push the tax to that property, and you can just do that for life, 1031 that money for life. Okay, so let's go through this again. Number 1, benefits of owning a multifamily property is you will always have demand for somewhere for somebody to live. So you'll always find a renter if somebody moves out. Rental income and cash flow. The beauty of investing in multifamily properties is the fact that your cash flow, okay, the cash flow is almost like your retirement. Okay, that is my retirement will be my multifamily multifamily properties. Okay, I don't invest right now in anything outside of rental properties. I just don't. I don't like to lock my money up in funds with the risks that there are in the stock market. I don't gamble with my money, and to me, that's gambling. A lot of people disagree with me about that, but I choose to hold on to my money until I have enough to purchase another multifamily property, and then I get to leverage the bank, cash flow, and all that good stuff, which brings me to number 3, leveraging a bank's essentially capital in order to buy properties that normally I couldn't purchase at 100% down, right? So I'm getting the leverage of the bank to purchase way more than what I have on hand. Figure 25 to 30% down on a property. And so you're also going to grow equity, which is number 4. You're going to grow your equity using the rental payments to pay down your mortgage. You're going to grow equity with the appreciation of the property, and essentially brings me to that 10-year mark, where let's say you have a 10-year ARM, adjustable rate mortgage, where you either have to refinance or take the current market rates, which adjusts every single year. I always refinance, and when I refinance, I take 150,000 out. Again, this is going to depend on the property you own and the equity that you have, and I go and buy another property to do it. So I'm literally leveraging, and again, this is the bank's money, right? I leverage, I refinance, I cash out 150 grand tax free, go purchase another property, add to my portfolio, and you do it over and over and over again. And again, some people may comment down below, yeah, but the market goes up and down. The market doesn't matter. My rent doesn't change. All I do is increase my rent every single year. My mortgage is the same. My the value of the property really doesn't matter as long as my rental is covering all my expenses and putting money in my pocket. Just because the market drops doesn't mean my rent drops too. Okay. Supplementary income. You could always rent more parking spaces, get more laundry machines, and so on and so forth, and use that extra money to put in your pocket or to pay for fixes around that property. The ability to bring more people into bigger deals to increase that down payment amount, just to get your foot in the door. And again, you guys will all benefit from the tax savings and everything I'm talking about in this video. Number 5, that was number 5. Tax incentives, number 6, my favorite. You can take your depreciation. I don't care how much money you make on that property. The depreciation, you can write that off, plus your mortgage interest, and you can cost segregate and take all that depreciation the first 7 to 9 years, which will drastically reduce your tax, what you have to pay in taxes. And again, if you're worried about having to recapture the depreciation in future years when you sell, you can always 1031 that money. And again, capital gains is 20% instead of your current tax rate. And I don't know what tax rate you're in, but so in the recapture, I don't remember what that is. I have to look that up, but I'll post it here. I'm going to go look it up now. I don't remember. It changes so often that I don't want to throw a number that doesn't make sense. So essentially, you could be liable on a tax rate of 30 to 35% on all your capital gains once you sell. And that's why I always 1031 that money into a new property, as long as you carry the same mortgage, carry the same type of property, and various rules that go along with 1031. I'll probably do a video on that in the future, but I appreciate you watching, guys. Make sure you comment down below, subscribe, turn on notifications if you like anything money related, right? Investing, stocks, real estate, and how to make extra money part-time with a side hustle. And I'm going to post a link up there. This is how I've funded my rental purchases, was through an online business. I talk about that more in the video up there. I just linked to it, sitting up on top. And make sure you subscribe, like, turn on notifications, help others, help YouTube show this video to other people looking into investing in multi-level properties, or multifamily properties, and those people would probably enjoy this as well. Comment down below also if you agree, disagree, or just want to be mean. It's okay, I could take it, and I'll respond as well. I'll respond to all my comments. Appreciate you watching. Talk to you soon. See you in the next video. Bye-bye.